Hi, welcome to Under the Radar Report. It's great to be here with our mining analyst, Peter Chilton. And Peter's been looking at lithium for a long time now, and it's been such an exciting sector. We've made big returns from Pilbara Minerals. And most recently, we've been excited by lots of takeover activity, with Albemarle making a bid for Liontown, and of course the merger that's been just recently announced between Allkem and Livent. Peter, what's driving this merger activity or this takeover/merger activity?
Well, I think the first thing is lithium is a very profitable business to be in at the moment. Strong growth, high prices. So for those big companies, they want to acquire more of it. And the best way is to acquire other companies which are already in production to accelerate their growth.
Yeah, I guess what you're saying is scale is a big deal.
Scale is absolutely very important.
It's not everything, but
scale is very important.
And I guess if we were to step back a bit, with the lithium sector, the price, it's very profitable, but the price has fallen 40%. What's caused that price fall, and what's it forecast to do?
Well, for a start, these prices are still good compared to what they were a few years ago. And a lot of the price falls have been in China, which are not representative or not necessarily representative of what's going on in the rest of the world. So prices have fallen, but fallen off a peak, an unsustainable peak. The prices we got at the moment are still very good. And in fact, prices are rising again.
But also the prices that they're actually achieving for contracts there won't be that much differential as what we're seeing in that index price action. Is that
That's correct? Yeah.
So what are the key qualities that you're looking at in a lithium stock? Like what sort of factors are you looking at in order to be able to take advantage of this high lithium price?
I suppose the key things are those companies are actually going to create a new project, a commercial project. So you're looking for quality ore bodies, quality resources, good management, all the makings of something which can grow, just like a Pilbara Minerals, from something that was very embryonic into something that's quite significant. So there's a lot of companies, but only a few are actually going to make it. So you've got to do the work to find out which ones have got the best sort of quality resources and scale.
And I guess lithium is quite an interesting commodity because there are two branches there's the lithium brine mining, and there's the lithium spodumene or rock mining. Why is there two types of mining?
Well, it's just a factor of geology, really.
Yeah.
Well, there's two types.
And are there disadvantages and advantages to both?
There are. Both are going to be successful because we need lithium, so both are going to be sought after. An advantage of hard rock is that you can often get these projects developing cash flow quicker. There's less probably barriers to entry. You can possibly use someone else's plant for the smaller companies, and you can get into production and sell your spodumene concentrate quicker than you would do to get a lithium brine project into production. But these companies like Livent and also Lake Resources and others, which are developing these direct lithium leach processes or direct lithium extraction, which can perhaps do a few shortcuts into getting into production. So,
and would that be a shortcut from a brine perspective?
From a brine perspective.
Yeah.
So rather than having these big brine lakes, these evaporation ponds, which take time to concentrate the mineral, this is a chemical process which can accelerate that. Rio Tinto is also looking at the same thing for their project in Argentina.
Is it faster and safer? What are is it a game changer?
It potentially is. Livent is probably the market leaders in this sort of technology, and that would be a great advantage for Allkem with that merger.
And Lake have a partner as well, don't they?
Well, Lilac is the discoverer. They actually own the technology. And they're earning an interest in Lake.
So this is disruption that we're seeing.
It is disruption, yeah.
And I guess, You mentioned upstream at the start of the interview, and are more companies trying to move upstream, like to get to that sort of that battery grade, that kind of like holy grail of battery grade?
Yeah, because there's more money to be made, or rather, the prices are higher at that upper end. Obviously, the cost to convert the lower grade material to the higher grade material, but clearly, to a large extent, that's worth the effort of going downstream. Plus the fact that a downstream product, which is upgraded, say in Australia or maybe Argentina, close to the resource, is going to have a lower carbon footprint than something you're going to have to transport halfway around the world to further process. And I think the electric vehicle industry is very keen to get the lowest carbon footprint possible in their raw materials.
So would you say, compared to other industries, is there much more kind of divergence happening within the different miners? So some are embarking on different processes, like in terms of getting exposure for an investor. What are the kind of factors that you're looking for?
Well, as I said before, you're looking for companies that can be commercial, that can upgrade their products to a higher value in a viable economic fashion. You're looking for companies that have got the scale to grow and service more markets. And you're looking for, bearing in mind that a lot of the products as used by the end customer, the battery makers, are very diverse, different sorts of batteries. You're looking for downstream capacity, which can be very flexible to supply all those different customers with the products they want.
So it's very much in the balance who are going to be the winners still. So you're spending time sort of working out the different stocks that can actually be.
Well, I suppose the industry is still dominated by a few big ones at this stage. Plenty of small ones or potential small ones. They've got to prove themselves. They've got to build their scale. They've got to have their share of M&A and then build themselves up.
But they are sort of coming through, and you're seeing them.
They're coming through, yes.
Yeah, well, I mean, it's definitely an exciting space. So
it's a very exciting space.
I guess the point is that investors need lithium in their portfolios. Is that, but it's very much stock dependent.
Well, because it's a growth sector, and because it's a sector that's potentially quiet and sometimes very profitable, and because you've got lots of new entrants, it's one of those sectors which offers potential for upside. Therefore, investors should have a part of lithium. I mean, at the moment, say the market's fairly dull, but some stocks in the lithium sector are actually moving quite well.
Yeah.
So really, it's a question of making sure you share a part of that.
Well, we look forward to Peter coming back on Under the Radar report, for more lithium insights, and we've got more stocks coming through for subscribers. So thank you so much for talking to Under the Radar report.